I think you can definitely make the case that gold has lost a bit of a momentum. But for this potential pullback to be confirmed, we need a breakthrough that support of the last 3 months, which is $2,280 to $2,300. And gold is still $100 above that number. So you can also make the case it's just another breather. It's been a volatile move higher. And if gold can regain 2,450 within the next few days or weeks, yeah, then maybe it's again on the way to 2,500. And if it breaks to that, yeah, we're probably going to see 2,600, 2,700. In the mid to long term, I assume gold will easily go above $3,000.
Gold prices increased on Wednesday, with spot gold rising 0.1% to $2,411.50 per ounce, and U.S. gold futures settling 0.3% higher at $2,415.70. This modest gain comes as investors focus on upcoming U.S. economic data, which could provide crucial insights into the Federal Reserve's interest rate decision timeline. Market analysts are closely monitoring the interplay between various economic factors. Jim Wyckoff, the senior market analyst at Kitco Metals, points to a weaker U.S. dollar index, lower U.S. stock index prices, and higher crude oil prices as key elements supporting buying interest in gold and silver. The recent technical damage to stock indexes suggests potential market tops, a development that could prove bullish for precious metals. As stocks face headwinds, gold and silver may benefit from their status as safe haven assets. However, the gold market's path forward remains uncertain. Florian Grummes, a respected analyst known for his insights into gold price patterns and market dynamics, offers a nuanced perspective. While acknowledging the possibility of a pullback to the $2,100 to $2,200 range, if support at $2,280 to $2,300 breaks, Grummes also sees potential for further upside. He suggests that if gold can reclaim the $2,450 level, it could push toward $2,500 and beyond. Grummes maintains a bullish outlook long-term, projecting gold prices to exceed $3,000. This aligns with other market observers, including Robert Kiyosaki, author of Rich Dad, Poor Dad, who predicts gold could reach $3,300 by 2025, particularly if Donald Trump secures the presidency. Please tune in for our exploration of Florian Grummes' expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Zoom out a little bit and look at the picture, okay? So this rally started in last October at $1,810 in gold. And it was basically the breakout rally that took us above this long 3.5-year resistance area at $2,075. Gold had been running against that resistance for many times. It's been disappointing. Finally, it broke through in early December, came back down, needed another 2.5 months of consolidation. And then in February, finally, the gold rocket took off and broke through that 2075 resistance. And quickly, gold run into new territory, of course, and topped out in mid of April at $2,430. So that was what I expected. That was more or less according to the plan. And then we've seen since mid of April various days when gold had big sell-offs. So on that 12th of April, we had a big $100 sell-off at Friday afternoon. Very untypical, no news, nothing, just gold falling like a stone suddenly. And we've seen that kind of event happening a few times afterwards. Still, gold managed to make a new high at 2,450 on Whit Monday, $20 higher, which already showed that momentum had gone, and it was just a merely new high. But at the same time, around $2,300, there was still coming new buyers into the market, or maybe a central bank buying physically and therefore supporting the price. And then end of June, the market was more or less oversold, and it was ready for a bounce, for a summer rally, and we got that rally towards $2,400 again. And by then, you could have made the case that it looks like market already again overbought the daily chart, so probably a kind of a head and shoulder topping pattern. And then you had the weekend, and you had the failed assassination on Trump. And on Monday morning, I think the whole market suddenly started to price in that most likely the new president will be Trump. You've seen tech stocks selling off. You've seen suddenly Russell stocks kicking in and getting bought. And you've seen also gold quickly rallying within 2.5 days to nearly $2,500. The top was at 2,483. And then it turned around very violently, and now we are back below $2,400, nearly $100 below last week's top. And it doesn't really look very healthy to me, to be honest. If I go back to 2016, on the night of the election, when back then the market was kind of surprised that Trump was elected president, you've seen gold also initially spiking dramatically higher in the same night, in the election night, and then came back and selling off for the following, I think, 5 or 6 weeks. Looks a little bit similar to me. In my opinion, in my analysis, I see a rather overbought setup on daily, weekly charts. I see high optimism levels, especially in silver. I think there is greed. I see a rather questionable seasonal pattern for the next few weeks and months. And I see simply the fact that gold has gone up from 1810 up to $2,400 over the last 8-9 months since last October. And now we have the second month where there's reporting no new purchases from China. And so why not accept that maybe there is time for a breather? So my expectations in the short term are not very high for gold. I would rather think that maybe we get a pullback. Textbook, kind of like it would be a pullback back to the breakout levels around $2,070, $2,100. That would kind of like technical analysis textbook. Doesn't have to be like this, but that's been my assumption for the last few weeks. I think you can definitely make the case that gold has lost a bit of a momentum. But for this potential pullback to be confirmed, we need a breakthrough that support of the last 3 months, which is $2,280 to $2,300. And gold is still $100 above that number. So you can also make the case it's just another breather. It's been a volatile move higher. And if gold can regain 2,450 within the next few days or weeks, yeah, then maybe it's again on the way to 2,500. And if it breaks to that, yeah, we're probably going to see 2,600, 2,700. In the mid to long term, I assume gold will easily go above $3,000. In my analysis, I think until October, we're going to see a pullback first.
China's record-breaking gold imports may slow as the People's Bank of China pauses its reported gold reserve purchases. This halt in May marks the end of an impressive 18-month buying spree, potentially signaling a shift in the world's most significant gold consumer's strategy. Florian Grummes emphasizes the significant impact of China's buying patterns on global gold demand. He notes that Asian buyers, including China, tend to adopt a more contrarian approach to gold purchases. This insight becomes particularly relevant as the market adjusts to China's changing stance. Despite this pause from China, the broader picture of central bank gold purchases remains robust. The World Gold Council reports that central banks, led by China, acquired an impressive 1,037 tons of gold in 2023. The momentum has continued into 2024, with net purchases of 290 tons in the first quarter alone, the fourth strongest quarter since the buying surge began in 2022. This recent quarterly figure exceeds J.P. Morgan Research's projected annual pace by about 36%, showcasing the persistent strength in central bank gold demand. Notably, this increase occurred despite a 5% quarter-on-quarter rise in average gold prices, underscoring the resilience of the central bank's appetite for the precious metal. Let's get back to the interview.
I mean, you know that the gold market is an international 24/7, Monday to Friday kind of market. There's lots of players active, and you always have to consider, and I think that's something that many gold bucks are missing out on. Your mining stock companies, yeah, they produce the gold. And if I'm a mining stock CEO and I see gold at $2,500, I need to lock in those prices for the next 3, 6, maybe even 12 months. Because I have expenses, I have to pay materials, I have to pay workers, I have to pay licenses, etc., etc. So many of those big gold mining companies probably have locked in pricing around $2,450 to $2,500 in the futures market. Initially synthetic supply, but these players have the gold in the ground and at some point will produce it and bring it to the market, right? So that's always one component. Then I told you already, I think China is not buying anymore at the moment. At least that's the official numbers showing it. And we know from the past that the demand from Asia, from China is rather not blindly following prices. So they are usually a bit more contrarian or trying to be contrarian. And again, charts have become overbought. you've seen that the momentum has been going down very recently. Since April, gold did not really make any progress anymore. Yeah, I think it's a healthy breather. I think gold will stand much better if it pulls back to 2,100 and then rallies to $3,000. That's my take still. Yeah. And also, by the way, the seasonal pattern. No? So it's not like in the first bull market between 2001 and 2011, where we've seen 3 times gold starting a rally in the summer, rallying into the spring of next year. We haven't seen these type of setups in the last 12 years since the top in 2011. It's been always a little bit tricky, the seasonal pattern. And since most of the demand now comes physically from China and Asia, the Golden Week in Shanghai, late September, early October, when the Shanghai Gold Exchange is being closed and there's no physical trading, that I think plays a big role nowadays. And we've seen it last year. The paper speculators in the West managed to sell off gold during that I think 8 or 9 days. Gold fell from 1945 to 1810. And then once the Chinese came back into the market buying physically, then gold immediately turned around and the rally that we are talking about started. So that's why I said early October, I would be probably assuming lower prices.
What's the long-term thesis for over $3,000 for you?
Well, I mean, massive money printing, not necessarily only in America, but all over the world. I mean, the dollar is still the best fiat currency probably. If you look at the money supply expansion in China, in other countries, you quickly will realize that it's unsustainable. And gold has a 5,000-year track record, and I think it's getting harder and harder to get it out of the ground. Chinese, the Russians, the Saudis, they're all accumulating gold. It's becoming more and more part of the international trade again, like it used to be in the past. Since the end of the the gold standard, the US dollar has taken that over. But I think it's very obvious that for geopolitical reasons, more and more countries demand also part of it being paid in gold. And I think there's lots of reasons to believe that gold will move higher. It's just not going to be a straight line. It's going to be volatile. And usually it takes a pullback or a sell-off in the market to shake off the weak hands, and then the market is ready for the next leg higher.
Considering the recent trends in gold prices, the potential for central bank revaluation, and the evolving economic landscape influenced by actions from major players like China, how do you foresee these factors shaping the future of the gold market and its role in the global economy? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.